Good afternoon, everyone, and welcome to the last MPC meeting for 2010. And thank you all for being here with us today. You'll find attached to the MPC statement when you get it and on our website after the meeting the dates for the MPC meetings scheduled for 2011. Since the previous meeting of the MPC, the outlook for domestic inflation has improved further against a backdrop of continued negative domestic output gap and sustained strength in the exchange rate of the rand. Persistently low growth in the United States and renewed quantitative easing, combined with renewed concerns about the solvency of some euro area countries, are expected to prolong the current environment of low global interest rates and continued capital flows to emerging market economies. While a number of cost push factors are beginning to pose some upside risk to domestic inflation, the overall risks to the inflation outlook are assessed to be fairly evenly balanced. The year-on-year inflation rate as measured by the Consumer Price Index for all urban areas declined to 3.2% in September 2010, compared with 3.5% in August. Goods price inflation measured 1.5% in September, while services inflation amounted to 5.2%. The categories of housing and utilities, mainly electricity, and miscellaneous goods and services, predominantly insurance costs, together contributed 2.2% of the 3.2% inflation outcome. CPI, excluding administered prices, measured 2.6%, while administered prices excluding petrol measured 9%. Of the 12 broad CPI categories, only one category had an inflation rate that was within the target range of 3 to 6%, while inflation rates of six categories were below the lower end of the target range. 5 categories with a combined weight of 34.6% had inflation rates above the 6% level. Having peaked at 9.4% in June 2010, producer price inflation has since moderated somewhat and measured 6.8% in September. Despite higher global food price trends, agricultural prices as well as manufactured food prices continue to decline on a year-on-year basis. This indicates subdued pressure on food prices in the coming months at the consumer level, where food prices increased at a year-on-year rate of 1.2%. The lower than expected inflation outcomes contributed to a further downward adjustment in the inflation forecast for the bank throughout the forecast period to the end of 2012. Targeted CPI inflation averaged 3.5% in the third quarter of 2010. A similar average outcome is expected during the fourth quarter, resulting in an expected average inflation rate of 4.3% for 2010. Inflation is then expected to remain at an average of 4.3% in 2011 and to increase to 4.8% in 2012. In the final quarter of 2012, inflation is expected to average 4.8% compared with the previous forecast of 5.1%. The more favorable forecast is a result of an expected moderation in administered price inflation, a more appreciated nominal effective exchange rate of the rand, as well as lower than expected actual inflation outcomes, which lowered the starting point of the forecast. Inflation expectations, as reflected in the survey conducted by the Bureau of Economic Research at Stellenbosch University during the third quarter, have been revised downwards for all categories of respondents. Expectations have been on a consistent downward trend since reaching a peak in the second quarter of 2009. Nevertheless, in contrast to expectations of the financial analysts, who expect inflation to remain within the target range over the forecast period, the expectations of trade unions and business executives remain outside the target range. According to the survey, inflation is expected to average 5.7% in 2010 and 6.1% and 6.4% in 2011 and 2012, respectively. The Reuters consensus survey of financial analysts, conducted in October, also shows a more favorable outlook, with inflation expected to average 5.5% in 2012. Break-even inflation rates, as derived from the inflation-linked bonds, have also declined significantly across all maturities to levels of around 5%. The global economic recovery has continued in an uneven manner, with downside risks to the growth outlook in a number of the advanced economies, including the US, Japan, and the euro area. Further fiscal stimulus in the United States appears unlikely, suggesting that the burden of supporting the flagging growth and persistent unemployment will fall disproportionately on monetary policy. The recent resumption of quantitative easing against a backdrop of deflation fears indicates that monetary policy in the US is likely to remain highly expansionary for some time. There is heightened uncertainty in the euro area, with the focus once again shifting to the peripheral countries, as concerns relating to the solvency of the Irish banking system and the sustainability of the Irish public sector deficits have raised fears of possible contagion within Europe and possibly to the global financial sector. Spreads on sovereign debt have widened again in some of the southern European countries after a relatively steady period, and in some instances have exceeded the levels reached in April 2010, when sovereign debt concerns reached their peak. Apart from the risks to the fragile global recovery, there are also significant risks to financial stability emanating from these developments in the advanced economies. Should the problems in the euro area not be resolved in an orderly manner, there are risks of a sudden reversal of capital flows to emerging markets. By contrast, growth in the emerging markets has remained buoyant, and in some instances monetary policy has been tightened in response to increased demand pressures. Furthermore, the strong growth in Asia, and China in particular, has underpinned commodity prices, which have contributed to the stronger trend in inflation in these countries. It is still unclear the extent to which growth in the emerging markets can be sustained independently of a recovery in the industrialized economies. Despite the higher commodity prices, global inflationary pressures remain relatively benign. Quantitative easing has continued to have a spillover effect on emerging market economies. The search for yield resulting from this increase in liquidity has implications for the exchange rates of the recipient countries. South Africa has been no exception in this respect, and appreciation pressures are expected to persist for some time in the absence of a renewed bout of global risk aversion. The exchange rate therefore remains a downside risk to the inflation outlook. Since the previous meeting of the Monetary Policy Committee, the rand has appreciated by over 3% against the dollar and is more or less unchanged on a trade-weighted basis. This has been despite lower domestic interest rates and the higher pace of reserve accumulation in the past 2 months. In October, the bank acquired the proceeds of the foreign purchase of data, which were in excess of $2 billion. The recent observed volatility in the bilateral rand exchange rates has been mainly as a result of the volatility in the euro-dollar exchange rate. From a policy perspective, focus is maintained on the trade-weighted exchange rate. The domestic growth outlook remains subdued, and below-trend growth is expected to persist. The forecast of the bank is relatively unchanged since the previous meeting of the MPC, with GDP growth remaining at 2.8% for 2010 and expected to average 3.3% and 3.6% in 2011 and 2012, respectively. The composite leading business cycle indicator of the bank has been trending sideways since April, suggesting a possible moderation in the pace of recovery in the months ahead. Private sector gross fixed capital formation is expected to have remained weak in the third quarter of 2010. The manufacturing sector, in particular the motor vehicle and component sector, was hit particularly hard by industrial action, which contributed to the contraction of manufacturing output in the sector in the third quarter. Year-on-year growth in the manufacturing sector output in September measured 1.4%, much lower than market expectations, while output contracted by 1.5% on a quarter-on-quarter basis in the third quarter. This was consistent with the declining manufacturing capacity utilization in the third quarter, as well as the weakening Kagiso Purchasing Managers Index, which has returned to below the neutral level of 50. The construction and civil engineering sectors are also facing a challenging outlook. By contrast, output growth in the mining sector improved markedly in the third quarter and contributed positively to third quarter GDP growth. The RMB-BR Business Confidence Index has been increasing, but still reflects negative sentiment overall. As a result of these trends, unemployment in the economy has shown little signs of reversing. There are indications of recovery in household consumption expenditure in the economy. Retail trade sales decreased by 1.4% on a month-on-month basis in August, but increased by 0.4% in September. On a year-on-year basis, the increase was 6.1%. Although vehicle sales have grown significantly on a year-on-year basis, the short-term trends have moderated somewhat, but were likely to have been impacted by the industrial action in this sector. Consumer confidence, as reflected in the FNB-BR Consumer Confidence Index, remains relatively high, but was largely unchanged during 2010. Household consumption expenditure is expected to be supported by positive wealth effects as reflected in higher asset prices and lower interest rates, but constrained by high unemployment and significant household debt levels. Growth in total loans and advances to the private sector by banks has continued to increase at a moderate pace, having increased by 4.1% in September. This figure was somewhat inflated by technical factors such as the acquisition of mortgage loan books and a general loan book by banks from non-banks in the past 3 months. Mortgage advances were again the main contributors to the positive trend, increasing by 4.8% on a year-on-year basis in both August and September. Growth in installment sale credit and leasing finance turned marginally positive after 17 consecutive months of contraction, while other loans and advances accelerated to a year-on-year growth of 4.5% in September from 0.4% in August. Credit card advances and bank overdrafts, however, continued to contract. In the banking sector, impaired advances to gross loans and advances declined marginally to 5.7% in September 2010, having reached a peak of slightly over 6% in November 2009. There is, however, some evidence that the banks are still charging higher spreads above the repurchase rate than was the case before the crisis, which indicates that the recent monetary policy easing has not been fully passed through to new borrowers. The fiscal policy stance has tightened moderately with the narrowing of the expected deficit before borrowing from the original estimate of 6.5% to a revised estimate of 5.3% for the current financial year, representing an estimated structural deficit of 4.1%. The deficits for the coming fiscal years have also been adjusted downwards, and a 3.2% deficit is expected in 2013-2014. Most of the adjustment has been due to higher than expected revenue collections. The main risks to the inflation outlook continue to emanate from cost push factors. These include wage trends and administered prices. Food and petrol prices are also identified as potential longer-term risks. There are some tentative indications of moderation in wage growth. According to the Andrew Levy employment publications, the average wage settlement rate amounted to 8.3% in the first 9 months of 2010, compared with 9.3% in 2009 as a whole. However, the quarterly employment survey of Statistics South Africa indicates that in the second quarter of 2010, the year-on-year average nominal remuneration per worker increased by 15.8%. The unit labor cost increase, which adjusts for productivity increases, amounted to 10.8%, up from 10.3% in the previous quarter. Global food prices have been affected by adverse weather conditions in a number of regions, but the impact on domestic prices has been counteracted in part by the rand exchange rate trends and the bumper maize crop. The exchange rate has also moderated domestic petrol price increases. Having remained relatively stable in a narrow range for the past few months, the price of Brent crude oil has increased over the past weeks to above $80 a barrel. This has resulted in a cumulative increase in domestic petrol prices of 25 cents per litre in October and November, and a further increase is likely in December. Global oil prices are, however, expected to be constrained somewhat by slow growth in the advanced economies. In considering the prevailing conditions and data, it is important to emphasize that the focus, notwithstanding any immediate impact or influence, is on the situation that might exist in 12 to 18 months hence. There are significant voices and varied opinions aired in the public domain, all expressing a view on what needs to be done. While it is important to listen to and hear what is being said, it is the responsibility of the Monetary Policy Committee to determine the path of interest rates without fear or favour, and this is what we will continue to do. The Monetary Policy Committee has taken cognizance of the improved longer-term inflation outlook and assesses the risks to this outlook to be fairly evenly balanced. The domestic economic recovery remains fragile, and the adverse global developments make the growth outlook more uncertain. The MPC believes that while monetary policy cannot determine the long-term growth path of the economy, it can impact on cyclical deviations from potential output. The view of the MPC is that there is room for further stimulus given the weakness in the supply side of the economy. The MPC has accordingly decided to reduce the repo rate by 50 basis points to 5.5% per annum with effect from the 19th of November 2010. This action is viewed as consistent with the continued attainment of the inflation target. A repo rate at 5.5% is the lowest rate in almost 30 years and reflects a real repo rate of around 1%. The scope for further downward movement, however, is seen to be limited given the signs of recovery in household consumption expenditure and credit extension. This will be assessed on an ongoing basis. Thank you. I'm happy to take questions. Just 1 second. Miriam. Again, if I can just ask that you do identify yourself for the sake of I mean, I don't necessarily know everybody, so if you can.
Thank you, Governor. It's Mariam Issa from Business Day. I think this is the third MPC in a row where you've said in your statement the scope for further downward adjustment is limited, and there have been at least 2 rate cuts since then. Are you embarrassed by this, or do you think that this sheds any doubt on the bank's assessment of the risks to inflation going forward? May I ask a second question?
Let's go with the first one first.
Okay, thanks.
The reality is you go with the data that's in front of you. I think for us, you know, in a sense, you try to give some guidance. With the prevailing conditions, this is what we expect. I'm not sure we said it last time. I think we said it the time before. But be that as it may, the question is that with the conditions as they are at and what we're saying that in this circumstance, we do not see much scope for further reduction. But it will be assessed, and I think that is the qualification that we make. When we have made those statements before, the expected inflation turning point was much higher than the 3.2% that we saw in the last month. So that the reality is we assess the data as we see it, and I think that if we were to be embarrassed, I think you'd ask us to be foolish. That says, we said that last time, therefore we can't act or take a decision on the basis of what we're seeing, and we are forward-looking. So no, I'm not embarrassed at all, and if I was, I would then end up in a situation which we wouldn't give you guidance, nor would we be able to change our mind depending on the facts. And I think we remain concerned that if you look at the statement that we've made each time, we are dealing with very uncertain times. And our job is to give you the best view of it that we can. And we will continue to do so. And to remain in the position to assess the data that's in front of us, to see what is happening, to interpret it in a forward-looking manner, and to be able to take decisions that reflect the reality as we see it, and not be hidebound because in a statement 1 or 2 times before we've said we think this is the bottom. Turns out not to be the bottom. So we can't hold on to positions that are rigid because we said something. We've got to go and have the ability and the confidence. I would interpret it somewhat differently. I think it's the confidence that we have to be able to defend the views that we see and the positions we take. So slightly different interpretation than you, Miriam. Yes.
Franz Wild from Bloomberg. My question is actually very similar. Given that the data isn't entirely unambiguous, how confident are you that this really is the bottom of the cycle? I mean, as Miriam said, we've heard it before. How much emphasis would you put on that statement? Thanks.
You're asking us a slightly different question, because we're saying to you, this is our view on the data that we have at the moment. If we looked at it, there are people who will think who are taking a position that interest rates, that inflation rates will fall much further, and it depends. The point is, it depends on what happens with the currency. The currency is a huge factor in the containment of inflation. So this is our best judgment at this point in time. And therefore, that is as confident as we can be in a very uncertain world with things that change very rapidly. So I think that's the context. These are unusual times with very, very rapidly changing information. And what we're saying to you is that on the basis that we see now, this is our view. Can we tell you 100% that this is the view that we would hold? If data changes, we would have to look at it again. And that's why we say very clearly we will assess the data and see what it says. On the data that we have and what we can see from what is being presented and understood, to the best of our ability, we think that this is a low end. It may not be the bottom, but from the data we have, that's where we think it is. Should the data change, and should the information change, and should the circumstances change, then we will look at that and take a view therefrom. Yes.
Zebamwe from SABC News. I just want to ask the Governor perhaps to explain a little more in details on your statement saying that the evidence of that banks are still charging higher spread in terms above the repurchase rate. Does it mean that on average it's higher than the 3.5% spread?
No, it's just saying that above the repo rate and what it is, that the amount of reduction that has been made in the repo rate is not fully reflected in what the banks are charging. It is not above that gap that stands there. It is actually below, but it's not necessarily the full reduction of interest rates that we have put on. Now, banks would probably respond that they price for risk and therefore the amount that they charge is variable. They do pass it through, but we're indicating from information that we can see that it is not fully passed through. So it's not the full amount of the reduction that is being passed on to new borrowers. It's a matter that we're pointing out. Yeah.
Candy from Summit TV. You mentioned in your statement that the rand has appreciated by over 3%. Now, that's despite lower domestic interest rates. What other options are there for weakening the rand? I suppose, facts point to the fact that rate cuts are probably not as effective as they should be. Or do you think that the rate cuts are as effective? And number two, how long?
I didn't hear that part. The rate cuts are not effective.
I'm asking whether you think the rate cuts are effective. And then number two, how long do you see rates staying so low? Thank you.
Well, that's the same question as they're asking, so I don't think I can go into that any more than we have. In terms of the rate cuts being effective, the rate cuts are not intended to weaken the exchange rate. If you looked at some of where we have cut or haven't cut, you can see the rand has varied in terms of its response. The cuts in rate are related to the question of inflation and maintaining it and looking at that creates a better environment. With lower inflation rates, you have the ability for more movement. It gives us a real repo rate of around 1%, and that's what we're doing. We are not making these cuts in order to weaken the exchange rate. I think that would be over-optimistic that is what you could do. Are there other tools? Well, many countries are trying different tools, including the G20, trying to have a discussion about a coordinated response to what is happening in the advanced economies and the impact on emerging markets. There are many different tools that people are trying. How successful they are remains to be seen. And some of that is just even look at what has happened with Japan, where they intervened to try to stop the appreciation of the yen or the Swiss franc and so on. So this is something that's an ongoing discussion in many, many countries as to what tools there are to give and to have an impact on the exchange rate. And in reality, as I said in the statement, it is a dollar-euro story as well. and the question of a search for yield that is likely to be there for longer. This isn't a short-term question, and that's, in looking for solutions, one has to recognize this is not a short-term issue. Yes, sir. The mic's in front of you. That's it.
Good afternoon, Governor. My name is Mpolosani Sidney Mudiba from Highway Africa News Agency. I have 3 questions, but I'll only ask 2.
Only one.
Only one.
We'll come round if there's time.
Okay. Governor, what is the bank doing currently, or what is it planning to do? Because if you look at the community level, at the community radio stations, or at the community level, they do not really know about the Reserve Bank, Governor. Here you have 7-member people who can speak the languages. Probably you've got Minele and the other guys who can speak Xhosa and whatever language, all the 11 languages. But I think something needs to be done for the community people to understand these things, because at the end of the day, when the market, we went into recession, nobody understood until they lost their jobs. Then that's where they started to understand the connection in between the two. So, like I'm saying, what is it are you going to do to roll out the campaign so that people can understand this thing better?
I think you ask a very important question, and I'm sure from our communication team, I'm very happy if you would have a discussion with Brian Hoger at the end of this meeting or this press conference, because we are looking at different ways to ensure that the work of the bank, what we do, how we do it, what our responsibilities are, what we can't do, the things that are not our responsibility or that is not possible for us to effect, is really important for all South Africans to appreciate and understand, because the decisions we take touch everybody's lives. So certainly we have been looking at a program to expand the way we explain what the work of the bank is and does, and we would be very happy to have a discussion with you in terms of perhaps a better use of community radios and other facilities. So please, if you can talk to Brian afterwards, we'll see how we can include you in that discussion of how to reach out better. Monde? Sorry, let Monde talk a little bit, because he is responsible for the outreach program that we have embarked on this year, and that we will be evaluating and look at how to improve for next year.
Yes, but besides, thank you very much, Governor, but besides the outreach program that we initiated this year, we definitely do respond to requests from radio stations and from the media, from different cultures and languages, as to explain the economic information, data, and definitely our responses, the monetary policy positions, both in all the languages, Xhosa, Swazi, and all that. So our researchers are there, and they answer the questions, and they to provide the information to the community. We may not be doing that a great deal, but we really intend to improve if we're not doing much. But indeed, we can take to the communications. But the research department does exactly what you ask. We do that.
Someone who hasn't asked a question. All right, we'll go back in the same sequence. Miriam?
Thank you, Governor.
Please don't ask the same question in
I
slightly
won't.
different words.
No, I won't.
And do you want to know if it was unanimous? Yes.
How did you guess? Was it straightforward, and was it unanimous? And I'd also like to point out that the questions I ask don't necessarily reflect my personal views.
Miriam, there's never an easy meeting. Unlike some of our colleagues who think things are easy, and some of those in the newspapers who also think it's very easy. Now you just sit there, and it's a very long, serious discussion that you try to look at all the issues and the implications, not just because, don't forget, and I think this is important, is that we're not looking at it for today. The decisions we take today, we are already talking into what will be happening in 2012. So that it may be perceived as what can we do, and it isn't that you don't have some impact now, but in essence, This needs to work through the system as a whole because we are talking to 2012 now. So it was unanimous, but never an easy decision. The second part was? That was it. The second part was yours.
I do have a second part. It's on the exchange rate. You mentioned it's rallied against the dollar since the last meeting, but it was stable on a trade-weighted basis. And the statement makes clear it's the trade-weighted basis which is more important. Yet, you say the main downside risk comes from the exchange rate. Can you give us an idea of how long you think the exchange rate will remain strong? And are you at all worried that if capital flows reverse suddenly, it could depreciate quickly?
Look, I think that the whole question here is this coordination that's being discussed at every level, including the G20. And how long will the exchange rate remain strong really depends much more on what is happening in the advanced economies, because that's where the search for yield is primarily coming from. All I think we should recognize is that if you went back to the early part of this year, there was a relative confidence in the international arena and the advanced economies that by mid-year of 2010, they would already begin to be easing out of the special measures taken. And it's quite clear now that is not the case, and that when they're talking lower for longer, they're certainly talking well into 2012. So how long will the exchange rate remain strong depends on what happens there. Secondly, it also depends what's happening in Europe, because the conditions in Europe right now over the last few days have changed. So part of that will impact, and that may well impact on what confidence is and what people's perception of risk is. So it's an uncertain environment. All we're raising is that we don't see it as a short-term question, and there is a real risk that should the conditions deteriorate, there could be a reversal, and it needs to be orderly. And that's what the discussions around the G20 is how do you manage all of these very complex questions? I don't know if you'd like to add anything, Daniel.
Well, I think there's not much to add, Governor, apart from saying it obviously will depend on growth prospects internationally, the yield environment as we have seen, and also the issues around these underlying sovereign and banking vulnerabilities that one is still seeing. All of that would sort of have an impact on the exchange rate outlook for global sort of currencies, not just the rand.
Yes, sir.
Governor, I just wanted to ask you specifically about QE2. How severe do you think the impact on the rand could be, and how soon do you expect to see an impact, if at all? Thanks.
I think that's very difficult for us to answer because although they've allocated $600 billion, it doesn't mean that $600 billion gets used in month one. And it may not need to be in that full quantity as well. So part of the question is that how much of QE2 moves out of the US, what is there, if there is any, a feedback loop, and that they would have to determine, not us, and then what proportion it goes to different emerging markets and in what time frame. So it's difficult to say specifically what the effect will be. I think it depends on how much is used over what period of time, and so on. So it's much more of a U.S. question of how they intend to exercise and implement QE2. Our view would be is that it will have an impact, and it will be part of a flow that is possible to increase. And that's what we have to be aware of, but we would not be able to give you specifics because that will depend on how it's implemented and the changing environment. You know, if the situation changes, they may not need to use it at all. What they've done is make provision for it. Yeah. Yes, sir. Sorry, can you talk into your mic? Otherwise, others won't hear you.
Sorry.
Thanks.
The stimulus package that is to be announced by the Department of Finance, do you see that perhaps in a way taking pressure off the Reserve Bank to do something to stimulate the economy if there's a need in the future?
I'm not sure if I follow you. I'm not aware that the that the Treasury is planning a fiscal stimulus. As far as I'm aware, they've put out their medium-term budget policy statement. They've set out what they're doing. If anything, they are bringing in the fiscal deficit, which is really a result of increased revenue. They're looking at how to use that increased revenue. So I'm not sure that there is a stimulus per se. Well, I think you'd need to look at what they're planning, because I'm not aware of anything specific there that they're planning. They obviously do have a number of things in place that they had as part of the original stimulus, which was in fact ensuring that they borrowed more and allowed the deficit to increase. So there's been a slight reduction in expenditure, but the deficit reduction has come primarily from increased revenues. So I'm not sure, but perhaps we could talk to you afterwards and see if we can answer you better there. I don't know if anyone has, yeah, but we can talk to you afterwards, step by step, and try and see what we can unpack with you, okay? Yes.
Afternoon, Governor. Sumitra Naidu from 702. Just talking about the G20 and the discussions taking place there. The Finance Minister has also said that a collective approach is needed. What are some of the measures that can actually be used to stem the appreciation of the currencies when they talk about the currency wars and to protect our export markets?
You want to try and have a go? Daniel was at the meeting, not this last one, but the one before, so perhaps he can enlighten you on some of the discussions there.
I think
you need to put your mic off, Sue.
Yeah.
I think the important thing in that regard, I don't think there are any sort of ready solutions on the table at this stage, but there's been the pledge to continue the coordinated effort and to seek to act together to avoid any sort of competitive devaluations as such, and to make sure that one avoids any temptation that might arise from the recovery that is uneven and at varying speed across region, to avoid any temptations that might come from there for people to embark on unilateral actions, because that, I think there is a realization on that in the long run that would not be very helpful, and potentially if that would spill into trade and end up in protectionist measures being taken as a result of which nobody would gain. The work that we then need to continue into the new year when France takes over the chairmanship of the G20 will involve a continued collaborative effort to try and find solutions. I don't think there are easy things that at the moment one can say this is step 1, 2, 3 that just needs to be implemented. So it's just a question of a commitment to avoiding competitive devaluations and seeking collaborative approaches as opposed to unilateral movements.
But perhaps in addition, part of the question that you're asking is also what measures are there? Now, we can, you can tabulate the measures that different countries have taken. Brazil has imposed a tax. Thailand has done something similar. France has tried to intervene. Chile has decided not to intervene at all, and so on and so forth. Reality is all of these measures have unintended consequences, and their success is questionable. So they're measures that are taken. So if you went to Japan and say, I think it was about $25 billion that they intervened to try to stop the appreciation. Did it work? I'm not sure what they would say publicly and privately about whether it did, but they didn't do it again, did they? And the yen is actually probably a little stronger. Switzerland incurred huge losses as a result of trying to stop the appreciation of the currency. I think that one needs to also just bear this in mind. Countries are not trying necessarily to weaken their currencies. They're trying to stop the appreciation. And Brazil, having introduced a tax, I think it had a failed bond auction that they couldn't get away because people were concerned about. So there's a lot of issues around it. And I think it's very important for us as a country to recognize that there's not a quick fix or a simple answer, or that if you do it, it necessarily works. And therefore the challenge needs to be, and we've said this before, there are opportunities when you have a strong currency to look at what you need in terms of capital expenditure. You need to have a coordination of policy to see that there's a complementarity on what you're doing and to work in that manner. And I think that's the challenge for countries to to look at it in a much more cohesive way, to say what is it that you need to do to make your economy grow. The exchange rate is one factor, but it's not the only factor. Yes, madam.
Why is the Reserve Bank keen to pick up more dollars? Some economists are saying we are wasting money buying toxic assets where we actually should be, increasing our gold stocks. Is that not an option for the bank? And this morning we saw First Rand paying its CEO a pay package of about 45 million rand. Now, is that setting a good example?
You'd have to ask them in terms of what they're willing to stand up and defend in public. I've made it very clear before, and would do so again, that when we're looking at earnings, we need to look as much at executive pay as any other settlements, so that it's important that executives recognize that their earnings are under scrutiny, especially those in the banks, and although it should not be confined to the banks, and that it matters, that what you earn actually matters. And in a public company like that, it should also be something that, it's there, it's disclosed, and they must account for it. I can't. I can only say that executive pay is something that we need to take account of when we're looking at the kind of increases that are there, and to ensure that we don't have exorbitant pay increases at executive level. Your first question around the building of reserves. I'm not sure I'd call them toxic assets. I think we would love to have a lot more. Let me tell you that. Switzerland, using Switzerland as the example, in this period of the crisis, they've actually doubled their reserves. They're now on par, I think, with Brazil, which has also hugely accumulated. China accumulated reserves in the last quarter at $189 billion US. They've grown their reserves over the year by $300 billion. So it gives them room. And I think the whole question of accumulation of reserves is to also ensure that, South Africa has always been an outlier in that, with very low reserves. Part of it is something that just reflects the amount of cover you have to protect yourself when tides turn. But perhaps, Daniel, in terms of that, you'd like to just discuss a little bit of reserve accumulation.
Yeah, I think just to add in terms of the role of the dollar, I think it's important to note that the dollar remains the leading currency in the world. Most of the world's trade is priced in dollars, and if one looks at the most recent survey that the BIS conducts every 3 years, the triennial survey, one would see that in the majority of the transactions that happen in the foreign exchange market, you'd have the dollar on one side of those transactions. And as far as our reserves are concerned and the accumulation thereof, we've got a diversified reserves portfolio. So our reserves are not only in US dollars, and that currency composition of your reserves is determined by various factors that have got to do with things such as your trade patterns, the currency of denomination of the currency's foreign debt, and that currency composition gets reviewed from time to time and adjusted when appropriate.
Yes, sir.
Governor.
Your second question.
Okay. The social media network has taken over the communication space. So we have Facebook and Twitter. Are you planning to be on them, because that's where the people are, that's where people want to interact with the governor? Like, you become, in terms of the youth language, you become the coolest governor in the world. Thank you.
Under these hot lights, it's hard to be a cool governor. I think the point you're making is something just perhaps it's not really monetary policy, but I'll answer the question around it. Is we, as I said earlier in response to your first question, we think the communication approach of the bank really, and we have spent quite a bit of time evaluating what we should be doing, how we're reaching people, where we need to be present, and certainly it is under consideration in the proposals that are being made. So I don't know about being the coolest governor, but perhaps the Saab will be somewhere there. Okay. Miriam.
Thank you. I've got two very quick questions. The statement says there is evidence that banks are still charging higher spreads above the repo rate, which means that lower interest rates are not being passed on to consumers.
They're not being fully passed.
Fully passed on. Do you think they should do more to do this? My other question is going back to the G20. They said that emerging economies with overvalued currencies could take macroprudential measures to try and deal with the trend. These, of course, are different from unilateral action, and I just wondered if you could say what South Africa might be able to do in that context.
Daniel, do you want to try the
I think
latter?
starting with the latter one, indeed, but I think that statement was premised on obviously taking into consideration country-specific circumstances. I think issues that were considered there were probably directed at some of the countries that are facing economies that are probably overheating, where they've got inflation issues to deal with. And the issue was to say what flexibility potentially could one have to address that situation with different tools as opposed to the standard tool that would have been increasing rates, which might exacerbate the problem of flows. So issues such as reserve requirements and other tools in that case will then be considered. So the situation that I think South Africa finds itself in at this juncture probably makes it difficult to look at those type of macroprudential tools.
I'm just seeing, yeah, you had a hand. Sorry, I didn't answer your first question. I'm not sure we can say more than that. What we are doing is pointing out that there isn't a full pass-through of the reductions in the rates. It really is then up to the banks to look at how they're dealing with the question of the reductions. You know, it's not for us to instruct them, but we are raising that we're seeing that there is not a full pass-through. And as I said earlier, because it's a repeat of a question that was asked earlier, is that the banks would probably look at it on the basis of saying, well, with new borrowers, they price for risk. The prime is an indicator. It's not an absolute. And therefore, the price that is charged to people depends on their creditworthiness and so on. So those are factors that we would assume are taken into account as to why there isn't a full pass-through, but we're pointing out that it is not happening. Okay, Sarita?
Yeah, it was just a follow-up to the bank charges. There was a meeting previously with the banks. I just wanted to know what happened with that discussion in terms of the difference between the repo rate and the prime lending rate. Is there any regulation on that in terms of why they have to charge 3.5% more? Is that decided by the banks? Is that decided by the Reserve Bank? Can that be changed? What is the circumstance around that?
It's not a regulation. What the commitment that is there is that should whatever way we've moved 50 basis points today, and it's effective from tomorrow, and therefore you should see that in terms of what all the banks do, because it is given that what we do, they do. The differential is a technicality, and I can ask Rolf to explain it to you in detail. He's sitting behind you afterwards. There is a paper on the website, but in essence it gives you a measure. There needs to be a common measure by which you can compare what banks charge you. So prime, in essence, is that differential. The banks do not necessarily lend at prime. We all know that they're above and below by different points. So it is simply a common measure by which people can look at and say, how much above or below prime am I being charged by my bank? Don't forget the amount that the banks borrow from the central bank is very marginal in terms of their total needs. So it doesn't set the rate, but it gives you a measure of comparison. So it's really a technical question of that. It's not what affects what they charge. It gives you the ability to compare. But if you do want to look at it further, Rolf is right behind you and was part of that team looking at it. Okay. Yes.
I'm just going to follow up on her question as well. What if, is there anything though that the Reserve Bank can do or is going to do about banks that won't pass the full benefits to the customers? And then just out of curiosity, are you starting to feel the pressure to weaken the rand? It is, after all, central to job creation in government's new growth plan.
Well, you'd need to ask government about its new growth plan and what's central to it and if the exchange rate is, because there's got to be a whole lot of factors that are central to growth. We will do, as I've said, I mean, we've spent this morning talking about how hard it is to weaken the exchange rate and how much you want to spend on doing it. And having spent it, does that even work? So are we feeling pressure around it? This conversation has been going on for a very long time. And we have no doubt that the strength of the currency impacts on the economy, and we will do what we can. But we're saying it's a combination of policy that is required to ensure that the country can grow. There's not one silver bullet, the exchange rate, that would make that happen. Okay, in terms of what do we put pressure on the banks? Banks run themselves. We are regulators of the banks. We do not instruct them on how to conduct their business. There's competition in our banking sector, and those of us who are operating in banks look at it and see what service do you get, what are the costs, what are the charges, and look at what you need to do. For us, we create and try to work on the regulatory framework that creates a soundness in the banking sector. It is not a responsibility of the central bank or the bank supervision department to look at what you charge. And again, the charges vary because, and that's really a question for the banks themselves if you want to look at what they charge and why they charge. But they do need to look at what they charge for different clients. We all have different creditworthiness and will possibly get a different price. But this is not the job of the regulator or the central bank to determine or fix prices and charges that commercial banks operate under. I don't know, Errol, if there's anything you'd like to say.
Thank you, Governor. I think it is an absolute market conduct issue. And as you correctly said, we are a prudential regulator, and we don't in any way regulate fees or fee structures.
Yes, Francois.
Governor, could you enlighten us as to what is happening to the head of the banknote company? When will we know about disciplinary measures? What is being considered? And can you actually tell us what happened? Was there fraud involved?
I want to remind everybody this is not a press conference. It is a monetary policy committee meeting or press. It is not about general matters. So I will answer you to some degree, but I do really want to urge that when the questions come at a monetary policy press conference, it should be confined to issues that relate to this. This is a labor dispute, and it is, in terms of labor practice in this country, the MD of the banknote company has taken the matter to arbitration because that is his right to look at that. In terms of the court rulings, this is a matter before the courts, and we are all silence is imposed on all of us in relation to what the dispute is. We have every confidence in the integrity of the currency. It is not around that issue. It is a matter before the courts in relation to a dispute we have with the MD as to conduct there. So really more than that I can't tell you. But it is not, we have every confidence in the currency, and it's not a question of fraud in that sense. But it is before the courts, and there is a court ruling. So I really can't answer you beyond that. The question that we have raised in our statements is that if there is activity that we are not comfortable with, we hold people who work in the central bank to the highest standards, and they are accountable. And therefore, if there are any measures that need to be taken, we will take them. You want a second bite of that, Cherry?
Yeah, please. And this is more related to today's subject. I just wanted to ask, thanks for answering anyway, just with regard to buying foreign exchange reserves, how aggressively is the Reserve Bank going to continue buying foreign currency?
To the best that we can. Look, the question about this is a very sensitive matter, and it isn't something that, you know, is appropriate to put out on a plate as to what your tactics and what you're going to do are. You have players on the other side, and I think it is appropriate for us to follow an approach that we think is in keeping with the resources we've got and what is possible at the time. We have a very clear commitment to continue to build reserves as and when appropriate, and we will continue to do that. And I don't think it's appropriate for us to go into further detail than that. You want to add anything?
Just maybe to say that we've got a very structured way in which we communicate with the market and stakeholders and refrain from, you know, giving running commentary, as it were. On every fifth business day of the working month, we've got a statement that we issue that details what our reserves levels are and explains any significant deviation vis-à-vis the previous month. And that's where I think you would need to look, and you'll see what actions we would have been involved in.
But it's post-event. Thank you all very much. Thank you for the questions. Thanks for being here. Please look at the dates of the monetary policy meetings committee meetings for next year, and then I look forward to seeing all of you then. In the interim, please have a wonderful holiday. December is coming round very fast, and I'm sure some of you will be taking a break in what is meant to be a quiet period. We'll see if it is. But thank you all very much for being here and for coming during the year, and we look forward to ongoing interaction with you.